Living the dream, John. Living the dream.
It seems like it. You've been busy since we last spoke. I think last time we did one of these, or not the last time we did a group one, as you just said, but the first time we did a one-on-one, I think you were just kind of sharing your insights independently on Twitter about, macro and all that kind of stuff. And I think you had a private like consulting sort of thing that you were doing, 21st Paradigm. Is that right?
Correct. Yeah.
And since then, you've kind of blown up. So why don't you tell me what the last 12 to 18 months have been like for you?
Yeah, it's been quite wild. It's been a been a crazy ride. I mean, long story short, it was just like you said, I was on Twitter just being a nerd, like all of us on Bitcoin Twitter, just super passionate about this thing. And got a DM from CK at Bitcoin Magazine about, joining the team. And their role wasn't really too well defined, but just started doing some media stuff there. And long story short, it kind of turned into more of a content side of thing. And then, now that's turned into just doing like the research, leading the research team at Bitcoin Magazine. So obviously we have a Bitcoin focus, and everything we do is about basically documenting the monetization process of Bitcoin, like the hardest money the world's ever seen. That's our like big picture thesis. But in between all that, we like to see, what's impacting this market on a day-to-day, week-to-week, month-to-month basis. We put out a research newsletter, and we're not focusing on trading signals whatsoever. We're just focusing on like what could have an impact on this market, and like for better or worse, like credit, bonds, all of the legacy system volatility that we think we're trying to escape with all of this. It still does impact the market pretty materially. So we like to cover that sort of stuff. And, that's why I'm posting about the 10-year treasury yield and that sort of stuff nowadays.
Yeah. And did you just celebrate your 21st birthday recently?
Yes, sir. This past weekend.
Happy belated. Did you have a good time?
Appreciate it. Yeah, it was a great time. It was a long time coming, but finally legal now.
I feel like, what do they call it when it's your birthday, the date that your birthday is on is your age? Is that like a golden birthday or something like that? Do you know what I'm talking about?
I haven't heard of that one.
We got to have one for the 21st. I mean, come on. It's like if you're a Bitcoiner, your 21st birthday is even more special.
Yeah, it was pretty cool.
Like
I had a good time
your
with my
Satoshi
friends.
birthday or something. Yeah, man. And I keep thinking, you put out all this insight, and I know many besides myself appreciate it. But what is it like being, I hate to be like the older dude being like, you're so young. Cause I remember when people would say that to me, I'd be like, who cares about age? It has nothing to do with my intellect or anything like that. But you are pretty young, and like you accumulate knowledge over years. And it's awesome to see people that are able to accumulate knowledge and then synthesize it into insight at such a young age, So like what is it like for you? And like, what do your homies think about, what you're up to and how many people listen to your shit and that kind of stuff? What's it like?
Yeah, it's pretty cool. Like I said, for the longest time, there was no like traction to it. Like I spent a year on Twitter in 2020 and 2021 being like kind of an anonymous, pleb, if you want to call it that, like, putting out content, but it wasn't like I was thinking of it about like as content. I was just posting my thoughts sporadically as they came to my head. And like, it didn't really go anywhere. And then I guess like, I put out a piece about like right before we first talked, I was writing a piece about like kind of my thesis or framework about like the long-term debt cycle in Bitcoin. And that like did really well. And so that was kind of like the first thing that got people to not notice me, like, but just was kind of the first big piece of traction. But my friends, it's cool. Like I live with all my college buddies still. So it's an interesting kind of dynamic, but I guess like the fame, like the niche internet celebrity, like just on like the Bitcoin side of things, definitely weird. Like I was in Austin 2 weeks ago, and some guy like randomly in the middle of the street, like stopped me, which was like, it's like, there's a little bit of imposter syndrome there, but it's cool. Like I'm not going to like think it's bigger than it is. It's just like, I'm a guy on Twitter, but it definitely is, has its perks and the advantages.
Yeah. Well, one of the things that I think is awesome about creating content or sharing your thoughts in any capacity online that has any reach whatsoever is that more people get to know what you're about. like when you meet someone new, there's that feeling out process, right? Where you're like, you chit chat for a bit. I got to see what this person, how much can I trust them? What's their character like, all that shit. But, all of us mixing it up on Twitter, and especially those that create more content than the average person, like people already kind of know who you are, right? So when they come up to you, you can just go right to, if they jive with you, you can go right to like a friendship almost, which is why the conference has been so awesome, right? Like last year, that was the case. I mean, you just meet so many awesome people, and it's just like immediately you click.
Yeah,
So
100%.
that's one of the benefits of
That's
being
why
so
Twitter is
public.
great.
Yeah. So tell me what's going on, man. I mean, like I said before we started, my focus is not so much on the macro these days, and it's partially because, and I think this goes for a lot of us, I'm all in. I've made my bets, and I'm going down with the ship, right? So it doesn't really matter what happens in between. But I think all of us, even if we're in that situation, we like to be educated and informed about what's going on, and we just have a natural curiosity because we're so deep in the weeds and all this about how this massive shift that we're a part of, and that we kind of are very confident about the end point, how the transition takes place, and as a result, how we should maneuver through it as it does take place. The macro landscape is super interesting right now. And so, the floor is yours. Tell me what you're thinking.
Yeah, I mean, so for better or worse, I'm in the same boat where, I've somewhat placed my bets, and, did that a while ago. So price volatility from 60K to even 10,000 is not really anything but a thing. I mean, I'm 21 years old, like send it to 5K for all I care. I'd love to stack. But yeah, I think we're at a really interesting time where, all of these kind of traditional, like if we're in this, Keynesian economic system, all of these like flashing red light signals that usually would kind of, light up before a recessionary period or before an economic downturn are starting to really like signal, yet the Fed's funds rate's at 25 basis points. We have the 10-year treasury at 2% with inflation at multi-decade highs. It's gonna year over year is going to come in at probably 10% in the next month or so here. And really you saw, I think the big shift or the pivot was, funny enough, at that kind of local Bitcoin top in November, when Powell came out and said, okay, we were wrong. Inflation's not transitory. We have to do something. And I think interestingly enough, Bitcoin is kind of like the most pure market signal of that, because it started to downtrend long before the equity indices did or anything else. It was like almost that pure like signal of, okay, the dollar is going to get a little bit stronger. And I think it's important to realize, like, over the long term, the dollar's, I like to call it, like, politically programmed to devalue. But over the short term, and especially with this dollar being the world reserve currency, you can have periods of dollar strength, relatively, and especially against other global fiats, where the dollar is strengthening, and even if it's weakening against a basket of commodities or real goods, it can strengthen against financial assets. And that's what we're kind of seeing. And so since November, we saw inflation continue to kind of rip. And since then, the credit markets especially were saying, there's a problem here. Because if you think of a fixed income instrument, they're going to sell off with a fixed income if inflation is at multi-year highs, because there's no incentive to hold a fixed income instrument in that environment. So what does that mean? It means that as inflation goes higher and higher, or as fixed income sells off, it kind of is this doom loop where it makes higher yields for anyone that's looking for financing, right? So not only from the government, but corporates, individuals. As these fixed income instruments sell off, we've seen markedly higher interest rates. And even though in real terms are still pretty deeply negative, we're starting to see stuff like corporate credit spreads. So basically the yield that corporates get on top of that treasury curve have really started to increase. So I think we're in the beginning stages of this. And like, if you're looking at equities with the sell-off there, it's all kind of been a multiple compression sort of thing. So equities are priced off of their earnings at a certain multiple, and the lower that yields are, the more crazy these equities and really every asset on the planet is valued. But what we haven't started to see, and I think this is coming, and I think it's going to be kind of like a don't blink moment for the Fed, where I think ultimately they'll blink, is the financing costs of really, the global economy, this stuff like the yield curve, where if these, durations on yields invert, it really throws a wrench in the entire credit system. And that's predated every single recession. Credit is really the stuff that, I've been watching recently, because for better or worse, this is the system we're still in. And I think, if this stuff all unwinds, we'll see a good buying opportunity in Bitcoin. And so, I'm not selling any coins. I'm not going short by any means, but definitely kind of watching all this stuff slowly unwind. And the Russia-Ukraine thing is like a figurative Molotov cocktail on the whole situation.
Yeah. I mean, at this day and age, like at peak or end fiat, I think and this may have always been the case, but I think it's really hard to disentangle political and geopolitical machinations from monetary and fiscal policy, basically, right? Like it's almost like everything that happens is related to monetary policy, and may even be like a perverse form of monetary policy. And I caveat, like there's other forces at play, of course, but if you look back through history, when things get really bad, when the powers that be, governments are in between a rock and a hard place, they always look for an external scapegoat or a reason to redirect the attention or the blame away from themselves, right? And I think we're all looking at this situation and being like, what can the move here be? If you raise rates, you really jam up things pretty hard and things go south, and but if you don't, inflation keeps running hot and you get a lot of disruption in economic coordination. So, and then we'll leave the Bitcoin piece for a second, but I mean, what do you think? What's your base case on how this is going to play out?
Yeah, I mean, it's pretty interesting. If you just look at, like, say, federal debt to GDP, since, I don't know, the early 1900s, every time it's gotten to a level like this, we've found ourselves in somewhat of a war. And I think maybe you could argue that 2020, the war wasn't, a kinetic war, but it was a war on the people. It was, it was a war on a virus, right? An invisible enemy of sorts. And so, we had unprecedented fiscal and monetary response to that. But I think if you're looking at a lot of things in the financial system in 2019, it was telling you a recession, a downturn was coming anyway. Rates were already being lowered. The Fed was already expanding its balance sheet with its supposed not quantitative easing programs, which was a repo facility that was injecting money in the financial system. So, like, they're already doing this stuff to begin with. In terms of like how this ends, and the Fed's role, the interesting thing is I don't even think the Fed and their 25 basis point cut or hike rather, and whatever they do for the rest of 2022, I don't even think it's all that important, because the Treasury market's doing that for them. And so, the Treasury market's trying to balance a couple of forces. They're trying to balance the huge inflationary environment that we're in today with the fact that with all of this debt, future growth is going to be basically capped. There's so much debt out there that the like in nominal, but also I think in real terms, there's no growth coming in fiat terms. And so, but I think where they're kind of the patsy at the table is that the incentive for policymakers is just to continue to devalue and debase. And even though they might get, fiscally tight for a year or a certain amount of time, the political incentives align where they're going to continue to debase. And so now we're seeing this huge commodity and energy shortage sparked by Russia and Ukraine, right? And this is where it gets really interesting, because if you look at basically every time energy is doing something similar to what it's done today, it's predated a recession, a pretty big one, because energy prices, it impacts consumer spending, margins, corporate margins, all of the like economic activity. Like it's just a fact. Poor people can't afford these oil prices.
Yeah,
right.
The input for everything, basically.
It's the input for everything. And so never mind the fact that we're seeing, and I am no geopolitical expert, and I won't pretend to be, but I've done some research, and just Russia and Ukraine, never mind the second order effects of the West being like, we're not even going to take what you have and what is online for oil and all these commodities. We're just going to like shun you because, we're so virtuous. If you're looking at what they produce for natural gas, what they produce for wheat, then inputs for things like fertilizers, all of this stuff is just a total mess right now. And so we're seeing a huge shortage of like real goods and services, something that like Keynesian stimulus can't do. In 2020, we had a demand shock, right? They locked everyone in their home, gave them paper money and said, okay, go spend it. Oil went negative, not because, there was no demand temporarily, but there was a glut of supply. There was nowhere else to store it. Now we're seeing the total opposite. There's a total supply shortage. And to fuel that demand, they're continuing to they're talking about stimulus checks, oil stimulus, right? So while higher prices should in theory lead to lower demand, we're seeing the opposite, and policymakers are probably going to continue to stoke the fire. So how does it all end? Well, I think we're slowly headed towards, gradually then suddenly headed towards a pretty large recession, and it ends in two ways. But I really think, despite it being somewhat binary, it only ends in one outcome. It is that credit continues to unwind because of this inflation print, which leads to higher commodity prices just because of a real shortage, leading to this massive recession and eventual demand shock where volatility explodes, credit unwinds, counterparty risk. At the same time that we have this real good shortage, to repeat myself, and the Fed is essentially going to be forced somewhat to implement, for financial stability purposes, to implement yield curve control. And in that sense, it gets really scary. And I said this, I think on Pump's podcast like a week or two ago, like, if you're thinking of a monetary system, like the tail risks of like deflationary deleveraging, depression, like, big scary words. And then the other tail, and maybe they're on the same tail risk, but the other tail of like hyperinflation, which is like a really obviously scary word too, and leads to disastrous outcomes. I think those two tails that in theory should be like very, very, very improbable, unfortunately, just with everything that we're seeing in the next 5 years, aren't really all that improbable, which is scary, right? And leads us to look for some sort of alternative. But just looking at everything in the credit markets and commodities and financial assets and being in this historic everything bubble, that's unfortunately what like my kind of conclusion, if you want to call it, is. And so obviously, the need for something where we can kind of escape this madness is more important than ever.
Yeah. And as you said at the beginning, I mean, Bitcoin is a drop in the ocean, that as these big processes take place, Bitcoin is obviously going to be moved by them, either dramatically to the downside, or, as we're all expecting, at a certain point, dramatically to the upside. I think you've mentioned before, and I think we're all probably familiar with like Dalio's debt cycle thesis, and then, the fourth turning stuff. And then I know Mark Moss has been talking about lately, like the 250-year revolutionary cycle. And it seems like many cycles are kind of coming to an end at this point in time, or converging. And so and I agree with a lot of what you said, but still, I mean, what do you think that looks like in practice? Because when all the COVID spending was happening, because I think society has been, if you want to say, fracturing or diverging or experiencing greater division. And I don't even just mean politically. I mean, like all of this like absurd monetary policy and the whole fiat system has been widening the divide between rich and poor for a while now. And that creates a lot of social problems. And they've been percolating up through the surface. And, in certain places, San Francisco, and where homelessness is rampant, and where crime and where cultural decay is obvious, you can see all that. And then basically the amount of the process that leads to that, which we did, let's say, from 2008 to 2018. So over the course of a decade or 12 years, we did in 2 years during COVID. You spend as much money and you create that much, you misallocate that much capital, you widen the wealth divide that much more, you allow, the rich to siphon off a decade's worth in 2 years, that sort of thing. And pretty shortly after that, you're going to see the emergence of the same social issues that you would have seen in the previous decade, just condensed, because it's that much more, egregious in a shorter period of time. So when you're, and of course, this is like, as Bitcoiners, we always think about this stuff, but when you see this stuff playing out, how do you position yourself? What do you think it's going to look like? I mean, like either a deflationary depression or an inflationary or hyperinflationary period, I mean, what does that look like day to day? Like, are you able to source food? Are you, in a safe environment, that kind of stuff?
Yeah, I mean, definitely. I had this discussion. It was somewhat of like a not a hostile discussion, but I think some guy was like he was like kind of shitting on me. I said something about like being the end game of fiat, and he's like, oh, classic doomer, and I was like, okay, well, my thesis is that we're at the end, like the end stages of the long term debt cycle. Or we're in a huge sovereign debt bubble. Do you disagree? And he's like, you gold bugs and Bitcoiners have been saying this every day for the last 50 years. You're telling me this time's different. And I posted a picture, and it was a graphic. It was from like the research that we were doing, like that kind of that newsletter. And it was the CPI, Consumer Price Index, and the 10-year Treasury yield. And it showed there was like shaded in green is when positive. It was when real yields were positive, and in red was when real yields are negative. And so since basically 1981, since like the secular top in interest rates, we've seen for the most part bonds had a very positive real yield. So inflation was lower than the yield you'd get, so you got a positive return. And since 2020, that is flipped in a very, very, very dramatic way, where inflation now at 7%, soon to be 8, 9, 10%, and those yields are still 2%, 3%. And so I think we're kind of in like, that end stages of, I think the 40-year bond bull market is done. So like the implications are pretty vast. Also, if we're thinking big picture, like peak globalization probably was in somewhere in 2020, 2021. And so what does it look like? Well, aside from having a big bag of Bitcoin, which I think everybody should, it gets into stuff like, do you have a freezer stocked with meat or stocked with food? Like these things aren't going to get any cheaper. I mean, not to be like a prepper, but I think preppers have been somewhat proven, somewhat right in the sense that like, a generator, stuff like that is like not a bad thing. And not to be too doomy gloomy, but like I wouldn't want to live in a huge city. I just wouldn't. These sort of things, like if we're right and things get even crazier, or even just now, right? Like if we're stay on the path that we've been on for the last decade, being in a city surrounded by millions of people in a blue kind of political environment, democratic, I think that kind of sort of collectivist mindset is not somewhere where I would want to be. I mean, make your own choices, obviously, but if we're just talking about like big ideas here, obviously having transportable wealth that you can take anywhere is important, but that's just a means to an end. And if you can't actually get anything with that wealth, like if you can't go buy the food you want to eat, even if you have all the money in the world where you are, what does it mean? And so in that sense, I mean, there's more to kind of this planning, but like land has some pretty important value in all of this, right? Like that's not a bad thing to have. But at the very least, yeah, like definitely have some Bitcoin. I personally, for the longest time, like I would just dump all of my cash. I have a little bit of cash, not a lot, where I'm still significantly long Bitcoin, but I have a little bit of cash, and I'm ready to buy some blood if we see it. But yeah, that's kind of how I'm thinking about all this.
Yeah, I mean it's a fair point. When things kicked off in 08, and I was a gold bug at the time, that was basically, I was ringing the alarm bells like, this is it. The whole shit's going to come crashing down now. And we kicked the can down the road for another, 15 years almost now. And even though, I feel the same way now, and I look at your work and that of many others and think like, I don't see how we kick it down the road. But, I was speaking with Corey Clipston a few months ago, and I don't know if his opinion has changed in light of recent events and that kind of stuff, but he was like, you know what, I think we're going to kick it down the road again. I think they're going to do it. And I'm thinking, but how? I don't know how they're going to do it, but, crazier things have happened perhaps, and in so many cases in these events in the past, when things deteriorate to this degree, you get these talks of price controls, and you get these talks of handouts, and you get these talks of, the evil, greedy capitalists and all of this rhetoric you see today. And I mean, I don't know what it was like to hear it back then, but it's so not like, most people aren't shocked by it today, like Tucker Carlson in the mainstream media might be calling it out, but everyone else is just like,
Yeah.
Is either apathetic or they kind of agree with it. Like, yeah, what were those oil companies doing charging us so much for? We got to put a price control in place there. And no, but I mean, so few people seem to have an appreciation for how those things play out and have played out in the past. And there's so much historical information about how those things play out. And, and so, and with regards to, being a prepper, and it's funny how like everyone is like, whoa, what, just like, I'm not a prepper, but I'm just saying maybe an ounce of prevention, maybe a little bit of insurance. And it's just the same of any other kind of insurance, right? If you have health insurance, if you have home insurance or whatever, what is it for? It's for a potential eventuality, for the probability that you might need, that something may happen that's unexpected, and you're trying to protect yourself. And so few people do that in the realm of the essentials, what they need the most, right? You need a place to live, you need something to eat, you need water. And it seems so absurd until it's absolutely necessary. So when it was, I think back in 2016, I did the whole like dehydrated food thing, right? So you get a whack of like dehydrated veggies and powdered peanut butter and rice and all this crap that you never want to eat, right? A freezer full of meat is a lot, like a freezer with a generator, a solar panel or something full of meat is a lot better idea. But I did it then, and it cost a few $1,000s. But the idea was, I'm never going to eat it. But if you need it, there's nothing you would want more. It would be almost invaluable to you, priceless to you. And I think that's the case today. But it is hard to, like, you look around and things are relatively stable, and yeah, prices have gone up a bit, but that for a certain demographic of people, that's palatable, it's manageable. And it's so hard to think that things can go off the rails so much. But then if you have any appreciation for history, you see how quickly things can change, as we always say, gradually and suddenly. So I know a lot of us, and the final point on that is, I don't even think a lot of us consider ourselves preppers. I think once you go down the Bitcoin rabbit hole and you start to think about ideas like freedom and sovereignty and independence and personal responsibility and these sorts of things, I mean, you just want to eliminate vulnerability in your life. I mean, that's how you establish ultimate sovereignty and freedom. You say, like, I'm not dependent on anybody but myself, and that maybe I think a lot of us dream of like that cabin in the woods or the ranch on the beach or whatever it is, where we're power independent, we're water independent, we're food independent, we're, masters of our own domain, and that's ultimate freedom. And, I think that's all we're talking about here is, if you can establish that, even if things don't go to hell, I think we'd all be, how we want to feel. That's the relationship we want to have with, that's what we want to construct in our lives. It just so happens that is also a very resilient approach to life for, fiat world going to hell and all the chaos that it might create.
Yeah, 100%. That's a great point. I think there also, like, definitely is a high probability. I mean, I'm not going to assign a number to it, that they do successfully for however long kick this can, right? Like, like it feels like everything's going to collapse, but they could, in theory, just somehow, like there's all the incentives in the world for them to somehow string this thing together and figure it out and kick it a few more years down the road. I think in terms of like, they following post 08, we had this kind of decade-long expansion without a recession. It was like historic, right? And just in the last 2 years following the post-COVID stimulus, like I think these cycles are going to get quicker and quicker just with how much debt there is. Also, just if we're thinking like big geopolitical developments, it's very interesting that I think we've kind of, some people said the petrodollar was shot in the dark in February with what kind of Putin did and the freezing of those reserves. And obviously Russia did some, like they started a war, right? And some people were saying it's a war crime. Fair enough. But I think what it told everybody was that fiat money, sovereign reserves aren't your reserves. And if we're just thinking about like, what does that have to do with this conversation? Well, if we're just thinking about Americans' standard of living, we've definitely, and obviously some classes of people have disproportionately benefited and some have been hurt by it. But the global dollar order has, for the most part, made consumer goods and everything much, much cheaper for the average American, for the average Westerner. We export our dollars all over the world for real goods and services. And so and it's not going to end tomorrow. And then there still is all this dollar denominated debt that's driving demand for our greenback. But if we're, if we reach the crescendo of this system and we're on the downturn, and countries like dollarized nations like El Salvador are saying, hey, we'll use Bitcoin, or Russia is saying, hey, we're going to price oil in rubles, or we're going to price oil, or we're going to price trade in gold, or whatever it is, right? If we've reached this period of peak dollarization, then Americans and all the people like that, I don't want to call them parasites because that's a strong word, and a lot of times these people, like, it's not their choice, it's choices that were made for them, and they're just kind of cogs in the system. But America doesn't really produce all that much relative to how much we consume, right? And so if that's in the process of changing, then we're somewhat in a position for a rude awakening. And these things take years; they don't happen in weeks or months, but years, decades. But I think these are kind of the big structural forces at play. And obviously Bitcoin plays a potential role in all this. I think there's a potential in the next month that we see some more interesting developments with legal tender sorts of bills. I wouldn't discount that whatsoever.
What do you know?
I don't know really anything, but I've just heard some rumblings, and I wouldn't be surprised to see more more developments that we've seen since last year. We had the Bitcoin conference last year. I would not be surprised. I don't know anything official, but I think that's just observing the trend. I think there's a decent chance of that sort of development.
Yeah, there seems to be rumors to that effect. But to your point about you don't want to be too harsh in your criticism of these people that are cogs in the wheel. Like, I mean, I do have criticism for them, of course, and one of them that I often levy is like a type of cowardice in not recognizing what's kind of right and wrong, and not being able to take action that's in line with that assessment. But that's one of the beautiful things about Bitcoin, right? Because I can certainly see, absent either Bitcoin existing or understanding its value, which is the case for a lot of people around the world today, you might just think, well, what's the alternative? Of course, I'm just going to keep trying to prop this thing up because I don't want disaster and I don't see an alternative. And what can I do to change anything? So I'll just keep playing my part in the system. And what's so great about Bitcoin is that once you get it and you realize there is a life raft, there is a parallel system emerging. I mean, you can hop off and be like, well, happy days. And then you put your laser eyes on, you become a psychopath like the rest of us, and then it's a lot more fun. You're able to actually, and that's, one of the beautiful things about this burgeoning culture is that you develop the power, the means, the confidence to actually call things out, and that manifests in a lot of different forms in this community. And some people don't like it sometimes, but I appreciate it so much because the system so often restrains and constricts people's ability to express themselves honestly and what they think is right or wrong, because their incentives don't draw that out of them, and in most cases it constrains it dramatically. People can't say what they really think and mean, whether it's in politics and finance and big business or whatever. You have to just go along with it. And this little exit hatch where you could come into this bright orange new world, like you're able to establish for yourself a foundational level of security that cannot be fucked with, so that you can start developing both the ability and the freedom to express yourself and what you think is right or wrong. And what could be better than that when we're coming out of a fiat system that has, where truth has been not a valuable thing for a long time, where other incentives have risen to the top of the hierarchy. And it's so great that all of us freaks are able to exit and start speaking the truth. And like all these mainstream media articles that come out and they say like, well, Bitcoin is a threat to the system, and it's true, right? Because the fact that it exists as a parallel system means that you don't have to be so adamant in propping the existing one up. So it's I'm sure we're in for a wild ride with all that. Do you ever think about or talk about with your friends or other people in the space, philosophical implications is not the right word, but what it means to have negative interest rates in a society, in terms of capital destruction and what if an interest rate is meant to discount the future, right?
Yeah.
What does a negative interest rate mean about your expectation for the future?
Yeah, I mean, big ideas, and that's the whole rabbit hole in itself. I think I would say part of it is just looking at the university education system itself. So many people just go to school, and this was kind of a realization that I woke up to in 2020. I mean, my college wasn't all that expensive, but did a year. But just the kind of realization that, whoa, like nobody even understands the cost of this thing. They just sign the dotted line. An unsecured debt that's forever, that for some people, I mean, you'll see these like horror stories, and a lot of times on Twitter you'll stumble upon them. It's like this post that got 20,000 retweets, and it's like, I'm 35 years old, I have a sociology degree, and I'm $200,000 in debt, and I've paid 50,000 since I graduated college, and my debt's only risen because they've only paid interest. And it's like, oh my God, just seeing something like that is mind boggling.
Yeah.
And so, definitely like a big idea, but I think most people don't really understand or think about, inflation rate, interest rate, the cost of capital, like probably we do. But whether it's, subconsciously or not, just the day-to-day decisions, how to allocate time, how to allocate capital when it's so distorted like this. And you referred to like a fiat world with fiat decisions. It's interesting because like fiat, right? And like it means by decree. And a lot of this kind of like upside down world we're living in, it seems like so many things are like, like whether it's like the thought police on social media, or like a man racing in a woman's race being the champion, and it's like a fiat award. It's a fiat. It's like, it seems like everything's so upside down, and not to be like, oh, it all comes back to the money, 1971 changed everything. Like, no, it's obviously bigger than that. But just like, it seems like so much of the craziness of the world today stems from the truth, like the communication mechanism, the coordination mechanism of our society, our money being fundamentally just distorted. And like, it's, there's so many factors at play, but I think that's something that, despite, all of us on the internet screaming about it and banging the drum every single day, that 99% of people have just no idea the second and third order effects.
100%. And it is an interest, like you could say that you're right. Like, this is the fiat system and it's by decree. And as a result, narrative is the dominant, like dictator of everything, versus in a system and a money, like a foundation like Bitcoin, where action and the values contained in that action are so tightly tethered to real world consequences, because you kind of can't untether them, that, what you get is far more real, far more truthful as a result of that, rather than, the ability to weave any narrative you want, because the entire system is predicated on decree. And I think this is largely why a lot of us, it doesn't really matter what the current thing is. There's like a baseline distrust, right? It's like, I don't care if it's COVID. I don't care if it's Russia and Ukraine. I know there's probably a lot more going on and a lot more nuance than, we're being fed in the mainstream media. And I have such a distrust for the institutions of the media, of government, of finance, of big business, all that kind of stuff, that I'm just going to abstain. I'm just going to, hang out with the homies and, send memes around and stack Bitcoin. And, I'm sorry, I'm not going to have I'm not going to pick a side one way or the other, because and I think we all realize that that's how we get controlled and divided, right? It's, you're forced to pick a side, and you're derided, or you're accepted as a result of what you choose. But back to the interest rate thing, it really is interesting to consider. Let's say you interest rate, like I said, interest rates are meant to discount the future. So, if you have a really high interest rate, let's say, okay, there is a future, but it's wildly uncertain. So if you want my capital, it's going to come at a high cost, right? If I'm a lender. Okay, there is a future, but things are really great. And, I'm pretty confident that the future is going to be even better. So, my capital is inexpensive, right? I'm not taking that much risk by lending it out, or my perceived risk is low. Okay, what does it mean when we have a negative interest rate? Okay, is there a future? Don't know. Because what I'm saying with a negative real rate is I'm willing to lock in the destruction of my capital at a certain rate because I feel it's going to be destroyed even more in the future at a higher rate than what I'm accepting right now. And so like we're kind of, the bet is the future has a lot of destruction in it. You know what I'm saying?
Yeah. Yeah. It's total madness. I mean, it just like the implications of negative interest rates, and it's not even understood. And the finance bros would be like, well, CPI isn't the official, like, year-over-year CPI, it's going to come down, or like all this sort of economic jargon, they'll throw at you. But it's like, no, I mean, you're never mind bond yields, right? Because people don't buy bonds aside from like Wall Street, like just a savings account, 25 basis points, like zero. It was zero for the longest time. And it's like, and like the banks will pitch it to you as like 10 times the savings rate from your checkings. And like the checkings account is 0.001 and the savings account is 0.01. And it's like, it's just total madness. And I think, despite like I said, I follow all the trends, and, I'm mapping out equity volatility and credit volatility, but I am definitely just looking forward to the day where money, as society knows it, is programmatic software. And all of this stuff that, like on days, like I do a little bit of advisory work for our like our hedge fund, right? And so like market positioning, and we're positioned large in Bitcoin, and we're just, most of it is around the Bitcoin market. But on like Wednesdays, every, whatever Wednesday every month, we're looking and reading the tones of some dude in a tie going out and talking about what the price of money is going to be. And it's like, why as a society, why are we doing this? And like, that is the environment today, right? Mm-hmm. This guy is going to come up and 12 guys in a boardroom are going to set the price of money. And we have to read the freaking tea leaves of what this future policy is going to be. And like, for better or worse, that's the system today. But
for
being
worse.
A 21-year-old, for worse, way for worse. Yeah. Good catch. But as a 21-year-old, and I look at the future that I want, and I think the future that maybe this is, cautiously optimistic that I believe I will live in, that I want my kids that I definitely don't have yet to live in, is that I think it's all outdated, and open source software that no one can change and or control or co-opt is the future. And so, most of this all, whether Bitcoin or equities or the price of the dollar goes up, down, sideways over the next 3 months, 12 months, 3 years, it's just noise. And I mean, I hope, and I think, the future is a lot bright orange in that sense.
Yeah. I mean, I see your tweets sometimes about, looking forward to pristine price signals. And it's so funny how so many of us in this space like almost get giddy about such a notion. Like you could tell one of your best friends, like, what are you most excited about the future? Pristine price signals. And they'll be like, what the fuck are you talking about? But it's so true. I think it's so absurd that either Powell or the board or whatever decides the cost of capital. So as you say, you have like 12 or however many there are, or if it's just Powell, whomever, like a handful of people making a determination rather than the trillions of market actions that should determine the cost of capital based on all the different interactions and preferences that every single person has with one another and with the natural world, to coalesce a genuine cost of capital that represents the productive capacity of that market in relation to the natural world and what all of them taken together emergently desire for the future. That's what it's supposed to be, totally grounded in reality, right? Mm-hmm. And then we get to see, like part of the reason why I'm so excited for that is not just the efficiency of capital movement and capital pricing and all this kind of stuff for allocating and coordinating activity, but it's because like the values that we all hold and the future that we all want and the preferences that we all desire to express, will now actually be able to be communicated with full incorruptible fidelity. And those will be signals to the market to say, what do we want and how can it be most efficiently coordinated and produced? Because right now, like, we have this supermarket entity sitting on the top, siphoning off all this capital to put towards their ideological or other aims, right? Whether it's their corrupt cronies or their stupid ideologies, or just their simple altruistic but misguided allocation of capital and therefore destruction of capital, right? Like, whatever it ultimately is, that supermarket entity gets to do so much of that, such that what we genuinely hold in our hearts and minds as in who we are and the type of world we want to see is not able to be expressed in as full fidelity as we would like it to be through our actions. And I'm just pumped that when the base layer of society is an incorruptible value signaling mechanism, then we get to see really what we're all about. Like, as individuals and as communities and cultures and humanity, like, who are we and what do we actually want? Because now we're able to find out. And, call me naive, but I think, we're more good than we are bad ultimately as individuals. And I think if we can have that kind of high fidelity mirror to keep bouncing feedback on and off and just back and forth for its own refinement, I think we're going to be able to experience a pretty awesome, life for us as individuals and families, and also like collectively for the world. But we've got to throw off this, this yoke of the fiat system first. And I think we'll look back on this time even more critically than we look back on the Middle Ages. We look back on the Dark Ages, right? And we say, like, even your image of it. When I manage that message, when I say that word, you probably think of like downtrodden and like, people with dirt on their face and kind of like not happy and gloomy and melancholy and all this kind of stuff. I don't see how, based on the contrast that we'll have from that point in the future, which is hopefully a Bitcoin denominated world, and what we have now and all the absurdity and madness and, irrationality of it all, and the downstream effects and how people have been so dispossessed by it. I don't see how we don't look at it as like a dark period of humanity. What about you? What are your thoughts on that?
I don't think you're naive at all, John. I think, you ask like a historian, you're like, hey, why did the Soviet Union fail? And like, anybody that has, a somewhat good recollection of history will probably be like, oh, because central planning economies doesn't work. You're like, okay, so if money is 50% of every transaction in theory, right? And we're centrally planning the cost of that, you're telling me we live in a free market? And the answer is obvious to anybody that's done their, due diligence here. So I agree that, and I hope the future looks at this time period, the period of central planning, central banking, as very archaic. One can only hope, and I think history will look good upon the Bitcoiners and the revolutionaries that were early to seeing this whole sham and voting with their pockets, with their wallets for a better future.
Yeah, I totally agree. But like, just the last point about the absurdity of our time, like, of course you make an entirely valid and logical point when you say that. And it kind of, most people, even the finance bros that you might say that to, I'm sure they'll have like a ready-made excuse why it's not the same thing and it's not equivalent and all that kind of jazz. But like, and I hate to bring something up, so, something so absurd, but also contentious about the modern world, but like, we can't even agree on something as basic as like human biology in a lot of cases. Like, we can't even just say like, this is this and this is that. Like the whole process of categorization that we use to understand our world and communicate and act within our world is breaking down, and so I don't have much hope for using logical arguments to explain this stuff to people. But again, that's why Bitcoin and number go up and all the other elements of it are so effective, because they don't rely on logic perhaps in the world that we're in today. They rely on something more emotional or something more convincing. But speaking of Bitcoin, I mean, and price talk is not something that I'm overly interested in, but you mentioned a few times that because it's such a small drop in a big ocean, all these big machinations that are happening in legacy finance are going to have some effect on it. And I think, we've been languishing in the 40K range for a while now. If there is a recession, do you think, or even if we kind of chop down in legacy finance from here, rates creep up a little bit, the dollar strengthens, do you think that Bitcoin continues to be treated as risk on, or does the narrative shift and it starts to be treated risk off?
Yeah, so there's a couple of really interesting things that I kind of watch the day to day, and I like to think of my approach to like market analysis with Bitcoin as like a three-pronged approach. So there's the macro environment, which is obviously, if we're thinking about 2020, it was record stimulus, free money, everything bubble, pump it up. But now recently it's been somewhat of a risk off, right? And so Bitcoin has been kind of for the while there, like January, February, it was almost trading tick for tick with like the NASDAQ. And people are like, oh, it's a risk on asset. Okay. But then there's the things that I think are really interesting where divergences can and will occur, which is like the on-chain side of things, which has gotten a lot of shit recently. But like I think there's a couple of reasons why, and then there's the Bitcoin native, crypto native derivatives. So if you look at like much of the 2021 tops and bottoms, these derivatives, which are just kind of like layered bets, financialized bets on top of Bitcoin, exacerbated a lot of the tops and bottoms. So like people were paying outrageous, like essentially interest rates on their Bitcoin to go long Bitcoin. So people were paying like 40% annualized to long Bitcoin at the April top. And people were like longs were getting paid 20%, meaning like you were getting paid to go leverage long Bitcoin at the bottom in July. And then same in the November top, like derivatives almost like exacerbate every single bottom and top market cycle. And so since like November, when like if you remember like the futures ETF and all of that launched, there was a bunch of speculative money. All of that's been washed out. So like in terms of speculative kind of bid or even like being net short, there's none of that. So like derivatives were kind of a wash. Where it gets really interesting is that we've had, all of this kind of macro madness going on, potential risk off, volatility across foreign exchange, commodities, equities, credit markets are exploding. And Bitcoin's obviously gotten chopped. It's, whatever, 40% off the highs or whatever it is. But if we're looking at like the supply side, which on-chain dynamics can quantify, we can't show like, we can show potential demand with some things, but really what we show with the on-chain side of things is like supply side dynamics. And if we're looking at like when every bull run happened, it was usually when under the surface, the plebs, the stackers of last resort had accumulated such a big percent of that free float where that wall of money that potentially was coming in had to just bid the hell out of the market to get their share. So right now I think we're about 50 basis points off of like, I think 63% of coins haven't moved in a year. And that's about like 50 basis points or 0.5% from an all-time high. And the previous times it was like that was at the bottom in 2015 and in like October, November of 2020, right before the market went parabolic. So like and then I think, 87% of coins haven't moved in 3 months. That's like almost an all-time high. And so like a ton of these like accumulation metrics, like the supply side dynamics are historically as strong as they've ever been or almost there. And I just named a few, but like there's all sorts of things that we can show like, holy crap, there's like not really much of this free float supply that's available. And so really it's a question of, all of these like macro funds that are trading correlations and all that have been net sellers since essentially November. Where it gets really interesting is that when these funds, the marginal sellers turn into marginal buyers, because the plebs are marginal buyers every single day, right? DCA army. When the big boys, the guys that are buying bonds and equities and whatever, come back, and they will come back, they're going to have to bid for probably a few million coins, and that's it. The supply side has never or basically never been stronger in the history of Bitcoin. And so, the on-chain, we can show that. We can't show when the marginal demand will come in. And so that's where I think there's a potential for some divergence, but really, whether it takes 3 months, 6 months, a year, however long, when this kind of whole system really starts to unravel, and it will, just with the debt burdens and the skyrocketing commodities and volatility, et cetera. When it all kind of starts to unwind, the Fed steps in, central banks, government step in, more stimulus, just basic Keynesian economics. They're going to want to keep the house of cards, not from collapsing. They're going to try. They're going to print a bunch of money. TLDR, they're going to print. And that's when I personally believe, and it could happen sooner, it could happen whether they print or not. But that's when I believe Bitcoin really is going to do what it did again in March of 2020, but at an order of magnitude or two higher, in the sense that like it's obviously much more legitimate macro asset now. It's adopted as sovereign. It's adopted as legal tender for a sovereign nation. All these sort of things, maybe multiple at this point, and it's legitimized by corporations, et cetera, Wall Street, and no one's going to sell because I think more people than ever, or not no one, but few, and more people than ever understand this end game. And so when we're just looking at like the wall of money that's going to come in when this next event craziness happens, they're going to have to attempt to buy a tiny portion of this free float. And it's just math. And it's just like, 21 million absolute scarcity we see. But in terms of like the supply available for them to buy, it's as low as it's ever been. And so, not for lack of like sounding like a broken record, that's why I like to kind of incorporate all this into my analysis. And that's why, despite being cautiously optimistic over the next few months, depending on what credit markets do or whatever, I own more Bitcoin than I ever have, because I think it's the logical thing to do, one, but two, this thing could rip at any moment and might not stop.
Yeah. Grade 11 math, some might say. But, but, so that's kind of why I asked, because it seems like, as I look at all this stuff, if you just look at Bitcoin in isolation, and again, I don't put too much stock in all the charts and the price predictions and stuff, but if you do look at it in isolation, it seems very strong, as you've been saying, right? But we have this massive, undertaker behind it sort of thing, the legacy system and the moves that are going to happen there. So I guess that's the question, right? Like, can Bitcoin rip regardless? Or if there is a recession or a big liquidity event or a lot of tightening, will Bitcoin go down with it? If that happens, do you think like you said earlier, that the cycles happen more quickly at this stage in the larger cycles? Do you think the recovery happens faster too? Like, I think COVID was a bit of an anomaly in how quickly that bounced off the floor. But if there is like a broader recession, do you think like 2 quarters and then they just decide like, we flushed out enough, we can't take any pain anymore, fire up the printer? Is that basically your thesis?
Yeah, it's a great question. I think that's the $1 trillion question. I think that's probably what they want to do. The question is does the system allow it, in the sense that there's so much layered bets. The credit system is so, the whole economic system is so engorged in debt. Is if they just try for a little bit of pain, right? We're gonna let equities go down 25% because we're in a bubble. Does the whole thing just compound on itself and unwind all the way down? Because that's just kind of basically the reality of a fiat system with no kind of hard asset backing. It's like, in previous depressions, say 100 years ago, it could all unwind onto a gold base, gold collateral, right? There's no collateral in the system except credit itself. And so if that's unwinding, they could, if they didn't step in at all, it would unwind to zero, like legitimately zero. Everything zero, money supply zero, equity zero, because there's no backing to it. And so I think there's a potential that we're gonna let this thing unwind a little bit, and credit blows out, equities just continue to mercilessly sell off, and guys with just a bunch of basically political incentives and really just like kind of social pressure decide, hey, we can't take this anymore. And so my timeline for that, I don't know. I'm not going to pretend to know. And I think everybody's kind of walking blind in that aspect. But I think there's a potential for this to happen a lot sooner and a lot quicker than people think, in the sense that just where we are in the kind of the end game of all this with this much debt in the system, whether it's sovereign debt or just total debt, they can't let this thing get unwind too much without really everything collapsing, which is somewhat scary, but I think that's just the reality.
Yeah. Do you think this structure, the fiat currency central banking system, kind of necessitates I mean, maybe not everything, because there has to be some kind of exterior market, but like the central banks basically end up owning the countries. And this is what, I don't know if it was Andrew Jackson or some of the older presidents in the States warned about, right? Like if you let the central banks in, then, your sons and daughters or your descendants will wake up slaves on the country that you conquered or something like that. And of course, in Japan, I think the central bank owns over half of the equities on the public markets or something absurd like that, because those are the ones that are going to keep having to step in and being the buyers of debt and potentially corporate debt or already corporate debt, but on a larger scale. And then maybe even equities to keep things propped up. Like all roads seem to lead to central banks owning the vast majority of public market, like the country basically through public markets.
Yeah, that's a scary idea. And I think it's happening essentially is that, if we're just looking at sovereign debt, the marginal buyers since the 70s have been foreign nations, foreign creditors. They buy our debt, or really, we buy our oil in dollars. They take those dollars and they recycle them back into treasuries, right? And so now, if those buyers, which we've seen have been net sellers since 2020, and who's making up the difference? The Fed, right? If those buyers are gone, which at the margin they're leaving, then it's all the Fed, and not just treasuries, but which, as a taxpayer, we're paying more just to pay down the coupon of our national debt than we ever have. But also, I think the Fed owns like 30% of the mortgage market in the US. I think, unfortunately, it ends with the Federal Reserve and central banks owning essentially almost all of the credit market, as people realize, a structural change in inflation happened. These securities are going to basically yield real returns on purchasing power for the foreseeable future. Why should I own it? And to keep the system intact, the central banks are going to monetize it. And so essentially, the scary thing is, we wake up in a world where we're paying our taxes to a central bank, or to our government to pay down the debt burden of a central bank. We're paying our mortgages. We're paying, all-time high real estate prices. And we're paying the mortgage to who? Oh, well, it trails back to the central bank owning the mortgage-backed security, right? Like, it is somewhat of a bizarro world, and I think ultimately it's almost, it's quite insidious in a way. But I think it ultimately ends up with the central banks monetizing the entire credit system, whether they get to equities or not. I mean, it's anybody's guess, but thank God for a vote for a better world.
Yeah, really. All right, last question. We kind of touched on this before, but I presume you, as part of trying to contextualize, your financial analysis and economic analysis, that you look at the broader historical context in which these actions have taken place in the past. So what do you like, I guess, geopolitically speaking, what do you predict accompanying the changes that we've been discussing? I know we touched on it a little bit already, but curious to get a little bit more meat on that bone if you've delved into history much.
You want to be a little more specific there?
Well, I mean, I guess what I said earlier about how everything is basically a perverse form of monetary policy from the Fed, right? Because like if monetary policy is in dire straits, then the people at the central bank, or the forces at the central bank, place pressure on the political machine to do whatever, right? And maybe we've seen who knows how much of that we've seen, because it's also opaque, but like all of this, the Goldman guys earlier in the year saying we're predicting 8 or 12 rate hikes throughout the year. Like, do you not think that was probably their buddies at the Fed being like, look, we need narrative control, not just yield control and all the rest of it. So you say 12, and then when we come out and say 8, it'll be dovish. And, that's how we're at that stage of manipulating markets, right? And to what extent does the Fed place pressures on politicians to do certain things to help alleviate the circumstance they're in with monetary policy directly? And so I guess my broader question is just, how do you see the political implications of what's happening in the monetary domain? whether, and you can take it wherever you want, like secession of, Texas and the Midwest from the US, or war, or that kind of stuff. Just curious to what you're kind of seeing in that domain.
Yeah, I think a lot of it is manifesting itself in collectivism, just based on, the populace and what they're going through. Unfortunately, I mean, this has been a subject of a lot of the crazy laser-eyed Bitcoiners, but, the great reset agenda, and, if the central bank owns everything, you'll own nothing and be happy. I think it's all somewhat interconnected. And there's guys that are a lot, maybe not smarter than us, but that, they've been seeing the writing on the wall for decades, about where the system will all go. And it's no coincidence that they're coming out with this sort of stuff. Like, I think we've talked about it. You've done book clubs on it. The Sovereign Individual, talking about how when this whole system starts to unravel, and the mega geopolitical kind of changes that we're going to see in these sovereign nations, how they're going to lock their borders and not allow travel, and they're going to, under the guise of a pandemic, like maybe that was coincidence, but maybe it wasn't, right? And just maybe it's just natural incentives. And if you like, I read some guy, Edward Dowd, and he was put out a thread in I think April of 2020, and he's like this former Wall Street guy, worked at BlackRock, and he called all of this really early on. And at the end of the thread, just about like the kind of the medical tyranny of the state and all of this, and he goes, why do I think this? Well, I've sat in the Wall Street chair for a long time, and all I'm doing is thinking, what would I do if I was in the chair, and trying to, kind of control some sort of like manufactured or like some controlled demolition? What would I do? Think like a criminal. And a lot of the craziness of the last couple of years makes sense when you view it through, some sort of controlled demolition aspect, and, finding some other scapegoat. And so I didn't really answer your question there.
Well, I mean, it's fair enough. It's a hard one to answer.
But yeah, I just think, a lot of the kind of the seemingly random events that we've been going through over the last couple of years are just manifests of a system in decay, and really politicians and kind of the stakeholders of this system looking for any way to deflect blame and to keep the game going and to keep order, even though a lot of the stuff that we're seeing is far from order.
100%. Yeah. And to keep, well, as you say, to keep alignment with these perverse incentives, like, right. So the politician, maybe they have a subordinate goal of keeping order, but they also want to not have the blame come back to them. They also want to keep their cushy job. They also want, so all these incentives are leading in the wrong direction. And I think part of what we do as Bitcoiners, referring to this Wall Street guy, who's basically, what he's trying to do is he's trying to determine like what frame makes what's happening make the most sense. Like what perspective, what ultimate objective or goal would make it all make sense. And, to his view, and I think it's pretty amenable to a lot of ours, is like, it's certainly possible that this is not accidental, right? There's a intentional component to how all this is happening. And maybe, maybe it's something as pragmatic as people realizing like, well, the system was never going to last forever, so we might as well juice the last few drops of it right at the end, and, make off as much as we can, and then we'll reboot things and hopefully have a better position in the new thing. And hopefully Bitcoin is throwing a wrench into those plans, and we're going to start with something a lot more fair for everyone. But, that's something, I think that's why we have these conversations or listen to these conversations, is because like all this data is just helping us determine the proper perspective or frame to more ably analyze what's happening and make sense of it all, for the purpose of allowing ourselves or putting ourselves in the best position to maneuver through it all. So, Dylan, any last words before we shut it down?
Yeah, John, I mean, this is fun like always. I gotta say I owe you a beer, man, because your pod back in March, like we were talking about, it was the first kind of, I guess, first podcast, but first time I ever spoke to someone with a big platform. And I think you helped give me a little kickstart in my career as somewhat of a analyst, or just maybe a voice in all of this craziness. So appreciate you and the platform that you've given me over the last year or so. and you're killing it as well. And I'm looking forward to Bitcoin 2022.
Well, that's very kind of you, man. I doubt that I had any influence in it at all. You know, you put out awesome work, and it's all you. But I'll take you up on the beer in Miami. It'd be great to have a few drinks and hang in the sun. So we'll do that in a couple of weeks.
Cheers, brother.
All right, brother.